The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, market trade action heading into a 3-day holiday weekend, wrapping up on Friday afternoon. Fairly quiet day when it was all said and done. A little bit of green on the screen in the grains. Cattle a little bit higher. Crude oil market, though, had a break to the downside. We have plenty to take a look at here and see how these markets are sitting as we head into a long holiday weekend. Joining us now, pleased to have her back on the program with us, Kristi Van Ahn-Kjeseth with Van Ahn & Company. Kristi, always good to catch up with you. I hope you're doing well.
You too. It's good over here. We have a lot of snow still in central Minnesota, and it looks like a forecast that possibly brings some more. And I am ready for spring, and I'm sure farmers are as well.
I was going to say ready for spring, but you know what? I guess at the end of the day, in hindsight, that's moisture. That's going to help out with drought a little bit. It's just going to be a mess when it melts. It's going to be nice and muddy there for a couple of weeks, I'm sure. So.
That it is. We had a very cool, wet spring last spring, and I'm hoping we don't get that hit twice in a row.
Yeah, let's hope that is not the case. Well, let's jump into the market trade. And I think just for starters, like I mentioned, fairly quiet when it was all said and done after Friday's trade. We came off the highs a little bit, it looked like. I know the dollar kind of got back around unchanged late in the session. Crude oil had a rough day. I know we'll dive into that more in a minute, but your take heading into a holiday weekend, just felt like maybe a lot of folks didn't want to get too many new positions on, just wanted to kind of keep it status quo headed to a long weekend.
Yeah, I think this market in general is just really stuck in a rut and can't decide where it wants to go. And it's like you're begging for information to move this market. You get the information, but it doesn't change anything. And so right now we're looking at March corn being pretty much limited at 685. And it doesn't really want to break much below that, though. So we get up to 685 to 688. We fall back down to around, 675, and then we're back up. So we've really been in a pretty consistent 15 to 20 cent range for quite some time. And you're looking at a very similar situation for new crop corn. $6 is going to be that level that probably brings out some sellers when you start to really plan pencil. You have a lot of producers right now looking at their break evens. You're meeting with your banks on operating loans right now and saying, hey, the break evens look really favorable right now for the corn market. And I think you're going to have a lot of sellers continue to show up around $6. That does not mean it needs to fall off by any means, but it means that we need something to happen to get us through here and push us through this level. And you can equally say that for the soybean market as well. When we look at it, old crop soybeans for March, you're looking at 1545 being a level that brings out quite a bit of sellers. But you would imagine that 15 to 1520 is also that psychological level. And so it's kind of that same situation. You're in such a narrow trading range. You do see more movement, though, when you look at new crop soybeans. We had a very big sell-off, and you're starting to inch your way back higher, all the way up to 1386 right now. And we were down to the 1335, 1340 level. And to see us build our way back up, I think a lot of people are looking at that market, and maybe even some outsider traders saying, hey, this level is not going to get the acres that we need to get. And we do remember that the acre numbers we get in the end of March are going to be turned in pretty soon. And so the prices that we're generating off of right now, these are the decisions being made right now. Those are what we're going to see show up in the end of March.
Very true. Well, and a couple things too, thinking about that acreage battle, a lot of it comes down to fertilizer. Folks are spring applying. I know we're seeing some more favorable fertilizer prices right now. One has to wonder, if that could sway some acres one way or another. As you mentioned, those break evens, start to pencil those out. Do we get some movement one way or another because of the way fertilizer prices are right now, Kristi?
Yeah, we're really starting to hear that, especially into the Dakotas, into North Dakota. That's what we've been hearing. And I honestly think that or corn had the upper hand to begin with, right? And now you've
Hmm.
seen these fertilizer prices start to come down. Now, Mother Nature and spring plays a big role in what acres are going to get planted, but it just continues to tip the scale further and further to corn being the more profitable one to plant right now in so many of these areas, especially for those guys that are locking in new contracts for rent that have higher prices there. You can just see the writing on the wall. You even start to have that talk about, okay, Minneapolis wheat for the Dakotas. It's just not there. We've seen it be profitable in the past, but you cannot get that push on basis. And you would think with the world dynamic that we have around us that you'd be able to get something going, but you're just not seeing that. And so I do think that you have the potential and the writing on the wall for a very large corn acre number. Whether that comes true or not is up for debate as we progress through actual planting. But it does look like that is what we're seeing right now. And soybeans really have to prove it and get up and moving to give that profitable range and take back some of those acres.
Well, and thinking about, exports as well when it comes to these markets, the corn export season's trying to get going here for the U.S. The soybean export season been extended a little bit with some of the weather delays in South America for the Brazilian harvest. But, overall, this export picture just hasn't been really robust. It's been okay, but it hasn't been great, Kristi.
Yeah, corn has been dismal. When I look at corn export sales, I'm really disappointed when you look at them. And not only that, you started off the week with kind of that buy the rumor, sell the fact mentality. We heard the rumors in the background that Mexico was going to think about stopping their ban on GMO corn, or I shouldn't say stopping the ban, but not placing the ban in effect. And we actually ended up getting that announcement that they pretty much were going to, especially going to keep or push that deadline back. And so they said they're still going to discuss some things, but they're not pushing that deadline. And then the next day, we actually saw a private sale for this year corn to Mexico. And it was like corn could care less. And we have to remember, and we have to go back to say Mexico is our top corn buyer. It has been in the past for many years. And so I think that this market is so tired and is so anticipating, needs to know what's happening next. Do we have a reason to hold these prices as high as we are? And because of that, these markets just struggle to get up and going, even when you have that favorable news for export sales. When you look at soybeans, I'm impressed with soybeans being able to still drum up these export sales that we've had consistently. And we've been shipping them very, very aggressive as well. Our export pace for inspections has been fantastic. And we have to remember USDA did backtrack and push and lower exports here in the January report, did not touch it into the February report. And if we continue to have these export sales like we do, they're going to probably have to come in and adjust that number down the road.
Well, I'm wondering too, thinking of USDA and some of the numbers that they have. I know we'll have obviously acreage numbers coming up here in a few weeks, outlook form coming up as well. One has to wonder some of these, milestones, I'll call them, in front of us here, how much that could sway these markets. Because to your point about corn, really couldn't care less about some of that Mexican news. It feels like a lot of these grain markets could care less about a lot of the news items that are out there right now, because to your point, they're tired of hearing about these things and waiting for something new, Kristi.
Yeah, same situation. You talk about Russia and Ukraine. We know that there's a lot of issues. We know that there's a revamp up there. We've had issues with obviously the balloon here that we know is from China. None of that stuff that normally moves the markets has touched the markets. And so I do think that they're just tired. Now, you brought up Outlook Forum. Next week, we're going to have USDA's Outlook Forum. And this is where they get a chance to kind of talk and discuss about what they see around the market and forecast. They forecast like 10 years out. They must be way better planners than I am in my own life. But, they come in here and they talk about what they see happening. And it typically does come into the market to a degree. And I'll be curious to see if it does next week affect the market. What I do know and what I'll be looking at is their acre number. Okay. Their acre number is not based off any sort of farmer survey out of this Outlook Forum. That's just what they're feeling, what they're looking at. But it's going to be one of those big, just like you got a firm to do a private estimate for acres leading up to it. It's going to be one of those peg points to look at it and say, hey, This is what USDA put into their outlook form. I'm also going to look at what their demand structure looks like over the next 5 years. Do they start to look at, the realistic ability to crush the renewable diesel that they want to see in the future? What do they do with the crush demand? And do we have enough to sustain that? What do they look at for ethanol demand moving forward? We know that we need to see some more people step up for exports if we want to be that producer of ethanol. So there's a lot of questions. They're not hard numbers. These outlook forms are not numbers that are like a monthly crop report that you actually go off of. They're just a guideline of kind of what USA sees, but it does give some insightful information on what they want to see happen in the years to come.
Well, and USDA said this week they expect farm exports to drop by 12% over the next 3 years. I wonder if that's maybe tipping their hand already to what they'll say in the outlook form. We'll have to see. Kristi Van Ahn-Kjeseth with Van Ahn & Company is our guest today here on Market Talk as we broadcast from the National Farm Machinery Show in Louisville, Kentucky. Kristi, let's talk about the crude oil market, the energy market too. Big drop in crude on Friday, down well over 2% and really held there. But yet, that didn't really seem to, again, what we were talking about, news items and things affecting the trade didn't really seem to affect the grain and livestock markets at all on the day Friday. But I wonder, what's your thought with this crude oil market and what you saw there?
Yeah, so crude oil at one point down over $3, and typically we start to kind of see that writing on the wall when you start to get that pullback. It does affect the markets, and it didn't affect this market. And we look at it and we say crude oil is in the same camp that you have the grain markets in right now. It is carving out a range, and it really hasn't budged off of it. We've had some tiny tidbits of information moving along. You did see Russia come out and kind of say that they are going to cut their exports. I think it was 5%. And you kind of got that information to push the market up. But it seems like that resistance point is up north towards that like $79 to $80 range. And as soon as we get up there, we start to fade this market back off. Now, in the past, the U.S. administration has said that they want to rebuild oil reserves. And we'll see if they're doing this moving forward. They released some this week, and that's kind of against what they've said in the past, that they want to rebuild that reserve. And so we'll see if they come in here towards this bottom end of the range. But when you look at the market, 72 to 74 has been that support line. So once again, you're in the narrowest range where you're coming from 72 to 79 until you can break out of that range. I really don't see a whole lot of difference. Now, a lot can change, a lot can move the market, but right now, this market seems like it's really okay coasting along for the time being. Same situation for the Dow market. The Dow has been crazy to watch. You come in here and you blink and all of a sudden the Dow is down 400 points. By the end of the day, it's back towards steady, and it seems like it's getting a wide range of trade, but it seems like it can't move anywhere in the grand big picture of things.
Well, and one more thought on the crude market, too. Some reports out, a lot of folks still focused on China and demand there, supposedly looking for China to import a record volume of crude oil this year and looking for their economy to recover. Talk of Russia maintaining their export volumes of crude oil as well in the month of March. But, we focus in on what's happening in Asia, in China, and obviously that's having a big impact on a lot of our commodities, as it typically does here. That crude situation, though, I think watching China the next couple of months is going to be the biggest key there in my mind. What do you think?
Yeah, I have to agree with that, because you look at the situation, beans did get hyped up here on China coming out of their lockdowns, coming out of their COVID restrictions. Really, when you look at it, China's going to have to fix a lot of issues over the next little bit to kind of, everything they've done, the damage that they've done to their economy with their lockdowns. And so if it's bullish on beans, you're right. It should be bullish when you look at the crude oil, and you should see it and wonder, what do we have moving forward for them to want to look at our product? And I'm hoping we start to see that. But as of now, it's been a little bit on the quiet side, and it hasn't given us that reason. But everything does tie back to China. And if China can get up and get some friendly growth numbers in their economy, I think that's a good thing across the board for commodities.
Now, something that I think folks need to be cautious about. We haven't had CFTC data now for a couple of weeks. Sounds like they're going to postpone that at least one more week as they figured out all the hacking issues. With that data, without that data, Can you explain why that is so important and why that could have a potentially volatile impact on the market when we do get that data back?
Yeah, so there's a couple different ways to look at it, but the biggest thing is, you can kind of track it and look at their general, perception of the market, right? If you're seeing consistent buying from managed money, if you're seeing consistent selling from managed money, it kind of sets the tone to say, do we want to be at the top end of the range or the bottom end of the range? And so it gives you that information. Information is knowledge when you look at these markets. And when we take away that solid piece of knowledge that we get on a weekly basis, it leaves you in the dark. And I'm just afraid that you can come in here and you can kind of give managed money and investment funds a scapegoat to say, hey, we can really run under the radar for a little bit and get our positions how we want them to be, and then not have anyone catch on to us right away. And I'm afraid that you're going to come in here and see some very bold changes from them for the last 3 weeks to a month. And the market's going to have to correct itself to say, hey, oh, wait, managed money has done this or managed money has done that. They have added length in soybeans and corn over the last bit leading into this. They are net short and sellers of wheat coming into this. We know that wheat's been able to run besides this week. And usually when you can kind of see wheat lead the way, it's investment driven, because investment funds are very prone to being short wheat. And so when they're covering those positions, usually you see wheat lead the way higher. And it has been the fact that you've been able to see wheat, not this week. We have wheat down about 20 cents on the week for Chicago and just slightly short for Kansas City on the wheat. But leading up to that, before that, we did see that support. And so I think that when we do get the information, you're possibly looking at a knee-jerk reaction to see people kind of adjust their positions to see what they did.
Okay, great explanation. Something we need to watch. Let's talk livestock a little bit here before we wrap things up. Live cattle futures sitting up there near contract highs. We've set contract highs a couple times now, last few sessions. Cash trades starting to pick up Friday afternoon. Steady, couple bucks higher. What do you make of this cattle market here as we head into the 3-day weekend?
Yeah, cattle, you're up high enough in cattle now that cattle has to have a prove it mentality. We hit the third price count here in live cattle, the second price count here in feeder cattle. You're making contract highs for live cattle. You're at the top end of the range on a standard deviation line. I mean, everything about cattle looks like you could be towards the top. And that doesn't say that you need to be at the top because cash is strong. But at this point, we're high enough that you need to prove that they deserve to be at this level. We know that seasonally, this next month usually is a high for the cattle markets for the time being. And so you have seasonals going against the market. You have the fact that you're up at these price counts going away from the market. We really do need cash in the cattle on feed to support these prices next week. If you can keep supporting them, I think they deserve to be here. I think that you could see that possibly that the economy has been able to shake off some interest rate hikes. We saw job growth out of it. So you can have that, but we just need to remember seasonally, this is not a friendly time over the next month to 2 months for the cattle markets.
And in the hog trade, I haven't had much good to say about hogs here the last couple of weeks. I know April, the front month now. I've been talking about that this here past week, seeing if it'll converge with cash or if cash will come up to April. What's your thought in this hog market here as we head to the weekend?
Yeah, hogs have been a ride. And so you look at them and you're like, are we going to be drastically higher or lower today? And you look at it, we need the index to really pick up here for the hog markets. And I think that's the biggest thing is if we can get the index to pick up, you can support itself, but we're at a key resistance point for the hog market that we need to get through on a chart. And you have room, honestly, to go either way. And so I think it drives back to that index to say, can we get it up going? And you brought up April. We still have some time on the April contract, but I'm worried that you're going to start focusing more on those deferred contracts and start looking those summer contracts and kind of leave April in the dust. And so if we can come in here and we can see the index start to catch up, which it typically can move if it wants to move, I'm supportive of them. But until then, they need to prove it.
Fantastic stuff. Before we let you go, any other final thoughts you have for us today, Kristi?
No, I think that's it. There's a lot of information that'll be coming. We are generating crop insurance prices right now, and it's, towards that top end of the range that we've seen in the years past for the corn market, not that far off of the all-time high spring price for corn there. Just another reason why you could possibly see some more corn acres. But this time frame here, there's some unique opportunities to be locking in some sales, some profit on the table, and don't let that fall asleep. Here in Minnesota, North Dakota, and South Dakota, we've seen basis levels extremely deteriorate for soybeans. You went from crush plants having, 15 over to 45 under very quick. And you need to remember to focus on the basis side of things, not just the cash. Treat the futures and the basis separately. We have strong basis levels for the most part at ethanol plants around here, and just be attentive to that because we don't want to see what happened with basis here for soybeans happen to corn as well.
Well, Kristi, great stuff. If folks want to reach out to you and the team there at Van Ahn & Company to get some advice, get some information, what's the best way to do that?
You can call us at 1-800-648-5494.
Fantastic. Kristi Van Ahn-Kjeseth with Van Ahn & Company. Thanks for joining us here today on Market Talk. Have a great weekend. We'll talk to you soon.
Thank you.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.